Listen, you can pay the IRS or you can pay your consultants. One of the things that I've learned over time is that everyone has a specialty.
Build that team. It doesn't all have to be in-house, but bring those people. Hello there once again. Hi, everybody. Thanks a lot for joining us. This is Steve Taylor here. I am the host of the Do It For Yourself podcast. Thanks for listening in. Hopefully, you've been here before, but if not, welcome. Our podcast, we really try to focus it on those who are out there doing it for themselves, right? In whatever kind of profession, whether you're professional, small company, large company, to try to bring on guests and have conversations that we hope can be helpful to you in whatever you might be doing in your work life. And so today's conversation, I'm really looking forward to, because it's going to be a topic that I've really had a lot of conversations with with a lot of different people over the years, is about this value of tax advisors, right? And tax practitioners and CPAs. And we'll talk a little bit about how they used to do it, how we think they should do it. But without further ado, my esteemed guest, Shauna, if you can give us a little introduction about yourself and what you do, and then we'll jump into it.
Oh, well, thanks so much for having me here today. Always fun when I get to talk about my favorite subject. So I know it's not everybody's favorite subject. Tax is typically the thing everybody digs their head into the sand for. So thrilled to be here. Thank you. So my name is Shauna. Most people call me Shauna the Tax Goddess. I am a specialist in tax strategy. Now, what does that really mean? There are many CPAs. There's about 660,000, according to Google, that do all sorts of things, right? They prepare taxes, but they're also CFOs, they're auditors, they're bankers, right? CPAs do all sorts of things. When you get specifically into the tax strategy world, those numbers of who specializes get really, really, really small very, very quickly. There are only 3 people in the country that do what I do, and I am in the top of about 807 that specialize in tax strategy specifically. So it's a really very, very narrowed niche. And from that standpoint, most people don't even know that a tax strategist exists. It's a pretty rare thing until somebody gets really pissed off enough to say, you know what, I'm done paying all these taxes and I want to do something about it. They don't normally find us. We're kind of like the little hidden gems of the world. So
Yeah, so that's great. That's really unique, that you have this term tax strategist, and not that many people would understand what it means or understand what having a tax strategy, because I think what they would say to you, what they say to me is like, well, I have my tax, quote unquote strategist. That's my CPA, right? They're
yep.
they're doing my taxes, right? They know I don't want to pay a lot of taxes. How would you respond to that, right? The majority of CPAs, I think what the expectation of what they get from a CPA or what they should be getting are really not aligned.
Not even close. Many people, again, they expect that their CPA is digging into all the details, that they know every single thing about them. But if you think about the standard world of a tax preparer CPA, right? Most of the time you don't talk to them, right? You talk to them maybe once or twice a year, maybe, right? Of course, around tax time. And then if something's happening, maybe you give them a call. But when you talk about a tax strategist, we literally need to become you to do our job well. So often we're having a meeting at least once a month. If you've got a major transaction going on, that might be once a week. If you are a brand new client, people love it and they hate it. Okay. They love it for the after effects, right?
Mm-hmm.
When somebody like our team, we've got about 100 people on staff here at Tax Goddess. When our team becomes you, they are applying all of the technical knowledge, all of that detail to your specific customized situation, right? Do you have dogs? Do you have kids? Are you in real estate? Are you into charity? Do you want to live overseas? All of these little pieces, we call them the chessboard, because every single family, every single person has a chessboard and all the pieces are different. They have to follow similar rules, right? You can't break the rules. Nobody's going to jail with what we do, right? But all those pieces play differently on the board. And so the combination of knowing who the client is to that level of detail and where it is they're trying to go, like what are their goals, capture which king specifically, right? Build generational wealth, pay for college, whatever those goals are. That combination allows us to bring the strategies, structures, entity modifications, whatever's necessary to not only, of course, get you the tax savings, but also get you to your goals faster. And I think that's one of the things that so many people just believe, well, my CPA knows everything about me. Really? Do they know that you have a dog and it's 120 pounds and you should be writing it off as security? My bet is probably not. So, and that's the big difference.
Yeah, Marmaduke would love that one. So, in my prior life, Shauna, I graduated when I graduated law school. I went to a Big Five accounting firm, right? I went down that road. I was going to become a tax lawyer, and as I went through, the one exam I've taken and I didn't pass, and I never went back, was a CPA exam.
Oh,
Right?
it is one of the toughest exams, and we need CPAs. They're amazing people, but ooh.
I wouldn't come clean. I'm gonna come clean. My heart just wasn't in it. I passed the law and that was it, during that time. But what you find is as you go through that and learn about the CPA and to become one, that CPAs are not tasked with being tax advocates or tax strategists. They are tasked
Their job is to file the return.
To file the return in a proper way, right? Whereas with attorneys, when I take my oath of the attorney, it's zealous advocacy on behalf of your clients. So, right. So a lot of people don't understand that, right? That that's not what's being called upon the CPA to do. They're just out there, they're out there reporting. And now there are very, very many good CPAs that do it, and they try to advocate, and they try to do the planning for them. They try to do it well. But even those that do it well, right, and are trying to advocate, they still, what I find problematic is they bill under the transactional model of it's a return, right? And we're going to charge you a fee for a return. So can you talk a little bit to that and maybe how your guys' services, are different than that, and whether, I don't know if you do, tax preparation, you'll let me know, but that how you build it and how you build up that routine of getting to know them and also doing the same job, and why being more involved with you guys are better than this old-time CPA that's just, and really how their business growth model is, let me see how many returns I can prepare.
Yeah, well, and you're hitting a huge nail on the head here, right? There is no possible way for a traditional CPA who's preparing tax returns to have enough time and energy to also be a strategist. They are two completely different jobs, right? So we do not do tax returns. We do strategy, period. Okay. And so we are not caught up in April 15th deadlines, right? The only deadline we have is December 31st, right? Because either you did the strategy or you didn't do the strategy, and that's the deadline. And so it gives a lot more ability to spend the time to really get to know your client, to really get to know those situations. And as you said, transactional, I want to know. We tell our clients, please, before you spend more than $5,000 or you make more than $5,000 that we didn't know about, call us, text us, Slack us, whatever it is, because we want to be able to give you that advice. And even though I know, so I am also a CPA. I did pass that one on the first try.
So congratulations! No small task.
No small task. But it certainly changed for me about 15 years ago. So Tax Goddess is now 20 years old. Changed for me about 15 years ago when I looked at the tax preparation side and said, I am not providing value at all. Right. I very much felt, I'm doing a good job. I'm helping people. I'm getting their tax returns filed, but it doesn't help them. It's this chore. It's this drag that they have to file a tax return every single year. And when we switched Tax Goddess to being more of the tax strategist, tax consulting angle, now I have paid for cancer surgeries. I have paid for somebody's dream since he was 5 years old. He wanted a yacht. I helped him buy a yacht. Those dreams, those goals, being able to bring somebody what they want in life, that makes me happy. And I think that's one of the biggest pieces where it's not transactional. So even though, yes, okay, you come to us, we look at your situation, we figure out which strategies are best, we implement those strategies, sounds like a transaction. It's not. Strategies last 3 years, 5 years, 10 years, hundreds of years when you're talking about building generational wealth. When our team can set up your family for success, that's when I'm happy. That's when we've done our job. And I think that's one of the biggest pieces here is that if you're going to have a tax strategist on your team, they need to be a part of your team, right? Just like your trust and estate attorney, just like your CPA needs to be a part of your team. These people need to work together to really be able to get you the maximum output, the best situation that can possibly be for the chess pieces that you have. So.
Yeah. That's great. That's really interesting, Shauna. We're as with my background and in our practice, we give a lot of tax advice, right? A lot of tax planning. We think that's a big part of it. And what I come across, and I'd really be interested to see how you do this, is many times when we come across and we're introduced to the client's CPA who we don't really know, and we're coming with a recommendation wherein we've looked at the return and like, hey, maybe this could have been done differently, or we're giving them a recommendation that CPA hasn't heard about, right? Yeah, I can see your face, right?
That's fair. Yeah.
They have a tough time accepting the recommendation and working with us. So
Yeah.
for someone that says, okay, this tax strategist, that's interesting. I didn't really know that I needed that, but now as Shauna speaks about it, right, I think I do. How do you guys bridge that gap and start working with the client's existing CPA for them to see the value in what you do?
Absolutely. So listen, I'm the downsides to being a redhead. I am very upfront. Okay. I don't
Yeah.
hold anything back. Okay. So really we tell clients, listen, there's two ways to do this. Okay. One, three. You hate your CPA, you're moving no matter what. That happens, right? That something got messed up, that happens, that's fine. We will refer you to CPAs that work with our strategies, that everybody's good and everybody's on the same page, and that's fine. That's about 5% of cases. Okay. Most cases, 80% of cases, you already have a CPA. You love them. They've done a great job for you. You've never been audited. It's never been a problem. And the question there becomes, well, what is their reaction to new strategies being brought? Okay. Because you get some of the older ones that they just don't want to look at things. Okay. It could be some younger ones too that don't have the same aggression level as you do, because different strategies have different risks associated. You'll get some CPAs across the room. Well, no, I don't know anything about that, and I'm not researching it, and I don't want to learn about it. If you have one of those CPAs, you need to find a new one. Okay.
Yeah.
Because no matter who brings the strategy, it could be your state attorney, it could be a strategist, it could be anybody. You could bring an article from Wall Street Journal and say, hey, publicly in writing, Wall Street Journal says this is a thing. And if your CPA reacts with absolutely not, it's time to find a new CPA. Just is. Okay. Now, we find more often than not, CPAs want to do a good job for their clients. They do. They just, as we said, they don't have the time. I mean, I read 3 updates a day from the IRS. I read all the court cases, right? I mean, that's my job, is to know things, right? So many CPAs, the good ones, will say, you know what? I don't know about that strategy, but can you give me the court cases? Can you give me the legal backup? Can you give me the IRS code? Can you give me the legal opinion? Where can I learn more about this? Can I have a meeting with the strategy team so that I can understand? That's the CPA that you want to stick with, right? Because those are the ones that, I mean, it always made sense to me. Not only are they going to help you, but they're also going to help all their other clients, right? Let's spread the tax love. I'm all about the tax love. So I'm all good if the only person upset is the IRS. So I'm good with that. So
Right. And they're supposed to just be following the law, right? They shouldn't be happy or upset when we're dealing with.
That's an entirely different conversation.
That's another
But
conversation. Yeah.
different conversation.
So I think that's great. That's a great point, right? About somebody, if anybody's out there, they're working with someone, and really whatever profession, if they're not open to your new ideas, if they're shutting you down and they're not having that conversation, right? You have to ask that question. Hey, is this someone that's really, not that they're not looking out for me, but how much are they missing, right? Because they refuse to see that conversation. So that's really important to work together. So then let me take that to the next step, right? In our professions, financial advisor and wealth manager, right? I mean, I understand our group, we had that tax bracket, and we bring a lot to it, but with other advisors for families, whether wealth managers, financial advisors, how do you work with them, right? Because some people would say, like, that tax planning, well, that should be maybe a part of what the financial advisor does, whether the client knows it or not. How do you interact with those professionals and help to bring that team together for them?
Absolutely. So one of the things that I've learned, I may look young, but I've been doing this for a bit. It's 25 years total that I've been doing this. So one of the things that I've learned over time is that everyone has a specialty. Okay.
Mm-hmm.
I don't particularly enjoy preparing tax. I can do tax returns, right? I am a CPA. I can do them, but not my jam. Okay. And the same thing happens with attorneys, with financial advisors, with insurance people. Okay. You get different specialties within the different arenas. So, for example, one of the most common scenarios that we see on the financial advising side is the family has somebody They love, like, trust. They've loved, liked, and trust for 20 years, right? They've always handled the money. They've done a good job. Investments are doing well, meeting or beating the market, that kind of thing. But with that particular advisor, they maybe don't know anything about life insurance planning, okay, from a tax perspective. Okay, if your financial advisor knows that and they say they know that, and I see as a strategist, I see that we're having a higher level conversation about whatever that strategy is, great, fantastic. Let's go do life insurance. You know what you're doing. I feel comfortable. You feel comfortable. The client is happy. Let's do it. If they don't, okay, same question. Do you want to meet somebody who can teach you, or do you want to leave whatever the expertise is up to the expertise for that one thing? I think, one of the places where I see professionals kind of get their heckles up, right? They get a little, this is my client, no, I'm not sharing and whatever, is when they feel like somebody is going to try to steal their client. Okay. And at least from my perspective, if you're doing a good job, nobody can steal your client. There is no such thing as stealing your client, right? Either you're doing a good job, they're in love with you, whatever, or let's work with other professionals to bring in the team so that you are the center rock star, super back quarter guy, whatever, right? You are running the show. So I'm just a big fan of teamwork. And I think a part of it is finding the right professionals where everybody understands this is your specialty, this is my specialty, this is Bob's specialty, and the three of us, this is how we work together to get the client the best possible outcome. So.
Yeah, I think that's a great point, and as the clients, as their net worth grows and it becomes more complicated or more important, right? They should be open for that. They should be open for bringing in more people and get those different eyes and the specialties on it. And also the same way for advisors, right? Where they try to be everything for that person. They're always going to be nervous. Like, what do I miss? What do I not know? What's not out there? So, I think for most firms, I've learned that lesson the hard way. I really do like that, right? Build that team. It doesn't all have to be in-house, but bring those people together. I was just on a call earlier where there was 5 advisors, right? It was a big complex legal settlement, but everyone was in their role and it was really, really valuable. So Shauna, so let me ask this, so you're doing the tax strategy, and my guess is you work with a lot of small business owners and entrepreneurs like many of us. And one of the challenges that we always have is getting them to sit down and doing the planning, right? Talking to us before, like you said, I don't know, about 5,000 is a pretty low barrier, but right,
Yeah.
I literally, thank God it was enough time. We had a client come in with like multi-million. They got this check. I'm like, oh, we got some planning to do, right?
Hi.
I
Yeah.
know, nice end of the year. So how do you get them, right? And how do you set that system to say, hey, I'm not your CPA, I'm the tax strategist. You got to come to me. How do you get them to sit down and give you that information? How often do you have those sit downs? And then maybe you said only 12/31 was your deadline, but not really, right? You got to get that information before. And what dates do you get them? Because I think a lot of practitioners would love out there as we're doing this kind of work, and so you're so tax related, which is on people's minds. How do you go about getting them to do what they need to do?
Absolutely. So, you know what? I would love to say that I have the magic wand as a goddess. Okay. I mean, that would be amazing. The one thing that I love about external deadlines, right, is that when the IRS tells you something, right, that December 31st is a very handy deadline to have. Okay.
Yeah.
I think we all, just honestly, I think we all run into the same issue. Okay. We all know that we should go see our dentist every quarter, every 6 months. Okay. But do we? Not always, not all the time. I could miss it by a month and I'll reschedule. It's right. We all know what we're supposed to do. Okay. There are really 2, I'll call them deadlines, that cause people to forcibly do something. Okay. One of them is December 31st, because with tax strategy, basically out of 1,800 tax strategies we use, there's only about 3 of them that go retroactive to a previous year. So you either did or you didn't. One of the 2, okay? So whatever the end of your fiscal year is, that one always causes pressure, which means the financial planners, the tax strategists, the bankers, everybody is running like a chicken with their head cut off starting December 1st, because the clients finally recognize, ooh, I should do something with this $2 million check that I just got, right? I better plan for something. Now, of course, everything in life follows a bell curve. Right? You have the pre-planners that are way out here, but they're a tiny, tiny percentage. You have the bigger section, September, October, I'm making some money. I should do something. And then you always have your last minute. We love them, but our last minute people that call us on December 25th, and you and me and everybody else already has a glass of champagne in our hand. Like, what do we do? Right. So I think the two big pieces here that really enforce people moving and doing strategies, one, constant communication. Okay. And I know everybody always says too much communication, too many emails, too many strategies. I can lead you to the water, but you have to drink, right? I cannot open a bank account for you. I cannot form an entity for you. I cannot do some of these things. And so if you really want it, you will do it, right? And I think that goes back to, when the redhead says jump, your answer is how high, ma'am, that kind of deal.
Right.
But the best way you can get that across to clients is just communicate. Hey, we're running out of runway. I'll give you a perfect example. Alternatives. There are investments that you can make that will give you tax strategies, oil and gas, solar, historic preservation easements. I mean, there's all sorts of options. Okay. But basically, when everybody starts to realize that they're going to have a tax bill, so October 1st-ish, right? Those investment alternatives start running out of money, right? Like there's no more alternatives to buy this year. So we've got clients. I was just on the phone on Saturday, actually, with one of our advisors, and he said, yep, there's only $600,000 left. And so I sent that message to my 5 people saying, you wanted to do it. There's only $600,000 left. Like, that's it, right? So I would love to say that I had the magic wand on how to get people to do what you need them to do. External pressure tends to be one of the best. So.
Yeah, that's awesome. So, and I would also like, to hear, when we come with a lot of these good strategies, right? We try to keep them simple, but sometimes they're complicated, right? Sometimes whether the laws, whatever they might be, they kind of make them complicated. And one of the challenges I always have, and I've always had over the years, is that when I bring a big idea or a big plan to people, they might say, "Oh, that's too complicated. That's too overwhelming. That's going to take too much time." I had this one client. We were laughing the other day. We were doing this new strategy here at the year end, and we thought he was in, but he was out. And this is he's always out. He wants to hear, but he's always out. Yeah. So when you have these strategies, right, that you want to bring forward, you want them to implement, how do you communicate that to them? And what do you do to make it more manageable for them to implement it? Because we all know the best advice is the advice that gets implemented. And many times they're just going to say, this is too much. I can't handle this right now. Come talk to me later when it's too late.
Yeah. And so we call it giving them cookies. Okay. So of course you could go into a bakery and you could buy an entire wedding cake, but you'd be sitting on the bench in front of the bakery trying to eat the entire wedding cake in one sitting, right? Like this, it doesn't work, right? Invite 20 friends and then you can eat the wedding cake, right? But so we give people cookies. We call them to-dos. Okay. So here's one to-do. If you do this one, whatever the action is, 7 steps, 2 steps, whatever it is, if you do this one thing, it will save you $50,000. Very plain and simple. Go do this one thing. It will save you $50,000. If you choose to only do that one thing this one year, okay, you still save 50 grand, right? Now, of course, you could do number 2, which would save you 100 grand, and number 3, which would save you 7 grand, right? But we sort the cookies. We sort them by the biggest savings first. So if you do this one thing, call this one guy, move some money, okay, it will save you $700,000. If that's the only cookie you decide to do this year, okay, no problem. You still save $700,000. Yeah. And so for a lot of people, our plans, when they're done, right? Our plans take anywhere from 12 to 16 months to write. I mean, they're massive. They're 800 pages of tax law, legal code backup. Even you, if you received an 800-page tax document, it would put you to sleep. It puts me to sleep. Okay. So we try right away, especially, for example, somebody signing up right now to work with us, right? We're going to give you 2, maybe 3 cookies. There's plenty more that we can do, but we're going to give you 2 or 3 because you have, 20 days to do something, right? And it's too much. It becomes overwhelming. So really breaking it down into much smaller bite sizes tends to be much more helpful.
Yeah, that's great, Shauna. You mentioned the time of period it takes to write your plan. That's what we tell a lot of clients also when we do our game plan. I'm a big sports fan, and we do the road to the championship, and I break them down about 8 steps. And I said we're going to do one, then we're going to do two. But for you with the tax strategy, you do that one. So is your work typically a one-time event spanning that period of time, or do you potentially have clients that go on for many years? I guess because it's very. I'm not going to say it's unique, but it's the fact that you only do tax strategy. You mentioned at the start how few of you are on that. How long do your engagements with clients go for?
Absolutely. So I'll be honest with you, it depends on what goals you want. There are some cases, let's say you sold your business this year, and so you have a $5 million gain. Okay. Big numbers. You won't need tax strategy. I mean, maybe you will. Maybe you have some interest earned on the money you gathered, right? But your big giant tax bill is this year. Okay.
Hmm.
So we will write plans. The smallest length of time is good for 2 or 3 years, right? Very specific for a very specific instance. You get other cases where it's 6, 10 years, right? You've got a business, you're making good money, you're planning for retirement. This is ongoing, you're making revenue all the time. And then some of our largest plans, these are people that want to build generational wealth. I am building the next Roman Empire, right? So these plans need to be good for 40, 60, 100, 200 years into the future. Now, of course, it's all based on the current law, right? Next year, the
Hmm.
laws can change, things have to change. So generally, when we write our plans, they're good. Most people don't have significant changes after a plan's written, right? Unless we already know about that in the process. So most people are good. But one of my own personal favorite examples, I had a client come to us and say, okay, I'm going to become a real estate professional. I'm going to buy 100 rental properties. So we wrote a plan, right? Great. This is what we're doing. This is how to do it. 3 years later, I get a telephone call saying, so I sold my 60 properties. I moved to Belize and I bought 3 ice cream shops. Now what? I'm like, okay, so new plan, right? Because life throws changes at you. The tax law can change. When we had that major update in 2018, we went back to everyone we had ever written a plan for and said, okay, we keep massive data spreadsheets on this stuff. You had this strategy, stop doing this, start doing this. You had this strategy, start here, stop that, all the way through. So we do our best to keep everyone updated. But again, a relationship is a two-way street. Even though we wrote a strategy 10 years ago, if you've got a question, reach out, talk to us, right? We're as long as I'm here and Tax Goddess is here, we're here, right? So,
Yeah.
yeah.
Yeah, I love that you sounds like you keep filling up your quiver with all these tax strategies, right? And all those arrows are coming out. That reminds me when I started my career off at a large, CPA firm. They would go and they'd work really hard and develop this really cool tax planning, tax saving strategy. And then they would go to everyone on the team and said, "Hey, listen, go find everyone that fits these parameters and go talk to them about this, right? Because we figured it out." And let's go find them. And I thought there was a lot of sense to that, right? And hey, we could charge X because we're going through it. So as we wrap up here, Sean, I'd like to, maybe give you an opportunity if you'd like, right? I always like these different ideas, these different hooks, right? That people aren't thinking about, right? Because as tax planning or planning professionals, we want to bring them an ideas. Like I'll give you an example, like as the attorney, I do a lot of estate planning, to try to get people sold. And I would say, hey, have you got your estate planning done? I'm like, oh, well, I don't really do my estate planning. I'm like, oh, okay, that's fine. All right. So tomorrow, you and your spouse pass away. Then what? Right? What happens? Right? And right? And that's not how you got them. So, what are some things? There's lots of talks now. I'm not going to ask you to try to predict what might come with this new administration, right?
I'll
Because
believe it.
there's no there's no point in that, right? But something you've been working on, something you're seeing, and listen, I'm not asking for any company secrets out there. Something really cool that you would think for like, hey, this specific type of client in this industry with this fitting these parameters, there's a great opportunity. Is there anything out there like that? I see you thinking that you've come across the last year or anything unique that like, hey, if you got this situation, you should give us a call.
Yeah, I think the biggest one, and let me phrase it this way. So it's for business owners, specifically for business owners. If your business is making more than 750,000 a year, okay, and you don't have a captive insurance program, you are leaving massive amounts of money and long-term wealth on the table. Okay.
Okay.
Captive insurance, especially what we saw during COVID, not to bring up the C word, but what we saw during COVID, businesses being shut down for reasons out of their control and their insurance companies not paying a penny out of all the annual premiums they had paid for 20, 30, 40 years, not helping at all. Captive insurance, there are good people and there are bad people, so be on the lookout. But if your business is gross revenue more than 750,000 and you don't have captive, you're leaving yourself a hole for multiple reasons, both for the insurance end and for the tax end.
Shauna, that's awesome because you just got my mind spinning because that was not on my radar, and that's exactly what I love. And so anyone out there, right, when you're thinking about that, if you fit that, that's a pretty broad brush. I like it more than X number. That's really cool. We're going to really go look into that. So Shauna, listen, I really appreciate your time here for everything. For people who want to learn more about you, we're going to put you out there on the show notes. Any parting words for anybody out there listening or anything you'd like to share or?
Listen, you can pay the IRS or you can pay your consultants. Choose wisely.
I like that. I like that. We're leaving on that. Thanks, Shauna.
Thanks so much for having me.